Thanks for joining me today. My name is Patrick Camuso. I'm the Managing Director of Camuso CPA. I want to take the time today to discuss Form 1099-DA. I'm sure you've been hearing a lot about this form and the proposed broker regulations in the headlines. What I wanted to do today was discuss this form in detail and even go over at a granular level the form itself that we'll call up here on my screen in a little bit, and we'll go over some of the intricacies of the form and some of the implications that are associated with the data that's being collected and reported on taxpayers. So one thing I want to point out in general about the 1099-DA is that this tax form is still not in its final form. We've seen the proposed broker regulations that were issued back in August of 2023. Since then, there's been a comment period where there were a very high volume of comments from industry participants and tax professionals. And a lot of these comments were critical of some of the information that's being requested in the form. So we're going to still have to see what the final form of this is. Nevertheless, at Camuso CPA, we're preparing our current and prospective clients for the tax implications associated with these forms, whether you're going to be receiving the forms or even possibly having to file these forms on behalf of your company related to other taxpayers. So, what is the biggest contention with this form? It is the definition of a broker and who is included in that definition. As you'll see on the form here shortly, there is the inclusion of unhosted wallet providers. So basically, currently right now with the proposed broker regulations, if you fit the definition of effectuating a transfer, that means that you're going to be considered a broker and likely have reporting requirements with this form. So in its current state, that can mean decentralized exchanges, for example, Uniswap, that's able to effectuate the transfers of exchanges. It's not fully decentralized because it's able to impact the fees and the front end website. So these are the types of DEXs and companies that may get included into this definition. And that's been the biggest point of contention. Why? Number one, is going to create a huge, tax reporting burden on the IRS and on taxpayers. The amount of 1099s that are going to have to get filed related to this is unprecedented, particularly because you'll see this form is filed at the tax lot level. Additionally, there's a lot of people that are predicting that if this is required, it's going to require DEXs to have to KYC people in order to be able to report the information to the IRS. And people are predicting that a lot of these platforms may start gating people out of using their DEXs, so they just simply don't have this requirement related to these reporting standards for US people. So that is the biggest point of contention. So let's get into the form. I'm going to share my screen here with the 1099-DA. So here's the form itself. And yes, you guys can see that. So you'll see the form gets started off here with just, basic information that is, whoever is getting included in reporting this form is going to have to collect. That includes KYC information: name, street address, city, town, state, province, zip code, what you would expect. But, if unhosted wallet providers continue to be included here, all of this information is going to have to get collected for your wallet. Then it's the filers and recipients' tax identification numbers, then information on the recipient, basically the same information: name, street address, city, town, state, province. Account numbers and CUSIP numbers will apply here if they're available. Unlikely that CUSIP numbers will apply, possibly account numbers related to a specific exchange, depending on how they manage their accounts and how they number their systems. So here is where the rubber sort of meets the road. Broker type involved in transactions. So kiosk operators are included. Digital asset payment processors, hosted wallet providers, which mostly is going to mean more or less centralized exchanges. And then you'll see here unhosted wallet providers. I'm not going to belabor this point. Obviously, I just prefaced this with describing an unhosted wallet provider can be anyone effectuating a transfer, and they're going to be required to file these forms unless we see changes to the broker regulations in their final form, which hasn't been released yet. What's interesting here is you're going to see a code for digital assets. So there's going to be some sort of coding system that the IRS is going to apply to digital assets. So I expect to see a pretty standard coding system for major cryptocurrencies such as Bitcoin, Ethereum, and others. And we'll have to see for more obscure tokens what their approach is going to be. There's likely going to be some sort of general code that gets applied there, but we're going to have to track this appropriately. And once there's more information related to this coding system, we're likely going to want to consider this both in our accounting system and our tax reporting system. So then from there, you'll see we get into date and time acquired, date and time disposed of. One thing I want to note with the date or times, you'll see here in the instructions, that the original date and time of the assets were acquired in Coordinated Universal Time, which is UTC time zone. So I think this is a good approach from the IRS, because if you see here, obviously they're going to be calculating the proceeds in the cost basis, which is going to be based off of the fair market value at the time of the transaction. So getting a consistent time zone and date and time tracking convention that's consistent across all taxpayers for this form is crucial for the IRS to avoid all the reconciliation issues that can arise from this. So UTC may not be what you expect to see the IRS to utilize for the time zone, but I do think it's the right approach, considering that the global aspect to cryptocurrency and the fact that there's going to be information coming not just from US sources but from international sources as well. And across the board, there's going to have to be some sort of consistency across the reporting time zones. When we're reconciling clients' accounts at Camuso CPA, oftentimes there can be timing issues depending on how an exchange or a wallet or an API is reporting the transactions. So I do think it's good that there is some consistency that they're planning to implement here. Then you'll see proceeds and cost basis getting reported. Another interesting item here is the wash sales loss disallowed. As you may know, wash sales right now currently don't apply to cryptocurrencies that are taxed as properties. So to see this box here can imply a couple things. Obviously, there's a lot of pushes on the political side to have wash sales be applied to cryptocurrency. And we'll have to see if that changes in the future. Of course, if that does change, then this box will be getting utilized much more frequently on this form. What also could be related to having this box on this form is the fact that we do see some forms of securities that have digital assets components, such as the ETFs. So it could be related to that as well. But we're going to have to see, what changes with wash sales in the future, and any additional regulation related to that on how it's going to apply to crypto. Right now, it doesn't apply to crypto unless you're dealing with some sort of security like an ETF. Then let's see here. So if federal income taxes have felt up to put it there, that's pretty standard. You'll see here gross gain or loss. You'll have to mark if it's short-term or long-term, as well as if there's any ordinary component, such as an airdrop or receiving money in the form of a payment for services or something else where you're going to have an ordinary tax exposure. Let's see. So I think this section is extremely important, and it's really showing the direction that this tax form is going to take and how the direction that IRS enforcement in general is going to take, because this is requesting the reporting at the tax lot level, which means at the transaction level. So there's going to be a high level of reporting that's required in terms of the volume of these forms that is going to get sent to the IRS. But this is also important because this is going to be used to track your tax lots, your accounting method selection, and the overall accuracy related to that. So you'll see they want the TX ID for the sale transaction, as well as any TX IDs for any transfers associated with the asset, digital asset address, number of units transferred. So they're going to want the hashes and the addresses of every transfer and every incoming deposit or disposition of cryptocurrency. Why is this important? For a few reasons. Firstly, at Camuso CPA, we see a lot of people that are, either self-reporting or working with firms that are not applying specific identification correctly. Many times we'll see them blanket select HIFO across their whole portfolio, not taking into account their actual facts and circumstances related to their flow of funds on chain across wallets and exchanges. Why is this an issue? Because I believe, after non-reporting, misapplying your accounting method is probably the next biggest audit risk. And this will start to be identified as a reporting issue related to specific taxpayers by the IRS by leveraging this form. And how they'll do that is they're taking all this information at the tax lot level. And therefore they're going to be able to do all the tax calculations at a tax lot level. Likely, these calculations are going to be performed using the default accounting method, which is FIFO. And if you as a taxpayer are using spec ID, and particularly if you're misapplying spec ID, there's going to be incongruencies between the IRS's calculation and your calculation. Then the burden is going to be on you as a taxpayer to substantiate your positions to the IRS. And then we're going to get into the details of, how are you applying spec ID? Is it matching your flow of funds, or are we dealing with, fungible crypto that you're commingling in one wallet and just trying to cherry pick the best accounting selection after the fact? So I think this form is going to lead to people not only getting ensnared because they're not reporting at all, but it's also going to get another group of people ensnared in tax issues where they're not correctly applying their accounting method and having discrepancies in what's reported to the IRS. I think that those are I think that's a good summary of this form and some of my initial thoughts on it. A few things that I'll add. Let me just stop sharing the screen here for a second. So a few things I'll add is that, particularly, overall, even if this form is restricted just to hosted wallet providers, but particularly if this does get imposed on hosted wallet providers in its final form, you as the taxpayer are going to have to scrutinize and reconcile this form against your accounting. This is going to be a new form that's rolling out, and these reporting requirements are going to be imposed on a lot of new entities and people that are going to have to do the tax reporting. So there's definitely, a likelihood that there's going to be inaccuracies on this form, just like, we deal with inaccuracies on many other types of 1099s related to digital assets. And, you're going to have to scrutinize this and reconcile it against your accounting to make sure that ultimately you're reporting accurately. So there's some potential tax issues that can arise from the form itself, and then even more issues that can arise if this form is actually reported incorrectly to the IRS. So this is something that you're going to have to scrutinize as a taxpayer, whether you're receiving the form or if you're issuing this form on behalf of other taxpayers. To that point, at Camuso CPA, we are proactive on this issue along with many other digital asset tax and accounting issues. So if you're a taxpayer and you're looking to get into compliance, or you're looking to make sure that your accounting methodology is correct related to crypto to avoid issues with this form, or if you just want to get prepared for when you start receiving this form and working with a good CPA firm, my firm is making sure that we're positioning investors and businesses to not have compliance issues related to this form, or to mitigate whatever issues are possible in our accounting and tax processes by being proactive and planning for this. So if you need to get into compliance or want to plan for these forms, in that regard, for when you're receiving them, reach out to my team at Camuso CPA and we can have that discussion in detail. Similarly, if you're a hosted wallet provider or an unhosted wallet provider that is anticipating that you're going to be included in the definition of a broker and having to report these transactions on behalf of your customers or users, this is something that my team at Camuso CPA is also working with companies on, and we can assist you with establishing robust accounting systems and tax systems that will properly collect, reconcile, and report this information for tax and accounting purposes. So whether you're on the 1099 DA issuer side or the 1099 DA receiver side as a taxpayer, my team at Camuso CPA can assist you, and we'd be happy to sit down and speak with you further. So don't hesitate to reach out to my team at CamusoCPA.com. Other than that, I hope you took some value out of this video. And until next time, I'm Patrick Camuso, signing off.